Ladies and gentlemen, imagine a world where the way we live, work, and invest in real estate is fundamentally transformed. A world where sustainability isn't just an option, but a requirement, where technology is not just an accessory, but the backbone of our homes and cities. The future of real estate is fast approaching, and those who aren't prepared for it may find themselves left behind. Today, let's explore the top trends that will shape the real estate market in 2026 and beyond. The first and perhaps most urgent trend reshaping the real estate landscape by 2026 is the rise of sustainable real estate. As the effects of climate change become more evident and urgent, both governments and consumers are demanding more environmentally responsible choices in every sector, and real estate is no exception. In 2026, we will see a significant shift in the way properties are built, bought, and maintained. Building sustainable homes and commercial spaces is no longer a niche trend, but a critical need. As energy consumption continues to be one of the largest contributors to global carbon emissions, the real estate industry is under pressure to meet ambitious sustainability goals. For developers, this means integrating energy-efficient systems, such as solar panels, rainwater harvesting, and geothermal heating and cooling, into every new build. But it's not just about adding eco-friendly features. It's about rethinking the entire design and construction process to minimize environmental impact from the ground up. Eco-friendly materials are becoming a key focus. Traditional construction materials like concrete and steel are responsible for a significant portion of the world's carbon emissions. By 2026, sustainable alternatives such as bamboo, recycled steel, rammed earth, and autoclaved aerated concrete will likely become standard. These materials have a much lower environmental footprint, and many also offer improved energy efficiency. This is not just about using greener products, but about reducing waste and carbon emissions throughout the life cycle of a building, from sourcing to construction and eventual demolition or repurposing. Alongside material innovation, there's also an increasing focus on smart homes that use energy-efficient appliances, automated lighting, and advanced insulation systems to significantly reduce energy consumption. As more consumers demand homes that are both comfortable and eco-conscious, builders will integrate systems that help homeowners monitor and reduce their energy use. By using smart meters and home energy management systems, residents will be able to track real-time energy consumption and make adjustments, improving both efficiency and sustainability. Moreover, as governments ramp up regulations and incentives aimed at reducing carbon footprints, developers will face increasing pressure to adopt these sustainable practices. Countries and cities around the world are introducing stricter building codes and regulations, which will require developers to meet green building certifications such as LEED, Leadership in Energy and Environmental Design, or BREEAM, Building Research Establishment Environmental Assessment Method. These certifications offer tangible benefits, from increased property values to lower operating costs, as buildings with these certifications are typically more energy efficient and have lower maintenance costs. Beyond the environmental benefits, sustainability in real estate is increasingly seen as an economic advantage. Buyers and renters are becoming more conscious of the environmental impact of the properties they invest in. Properties with green certifications and energy-efficient features are not only more attractive to the environmentally conscious consumer, but often come with financial perks, such as lower utility bills and tax incentives. As the global population continues to grow and urbanize, the demand for sustainable and resilient infrastructure will only increase. In fact, we're already seeing that sustainable buildings are becoming a key selling point in the market. Developers are starting to view sustainability not just as a social responsibility, but as a long-term investment strategy. The real estate market is shifting towards climate-resilient design, with a focus on buildings that are prepared to withstand extreme weather events, rising sea levels, and changing climate patterns. This includes reinforced structures, flood-resistant designs, and the use of natural ventilation to reduce reliance on air conditioning. In the luxury real estate sector, we're seeing green mansions with cutting-edge environmental designs that integrate seamlessly with nature. These eco-luxury homes feature sprawling rooftop gardens, geothermal heating systems, and materials sourced from sustainable forests. The message is clear: sustainability and luxury can go hand in hand, and today's affluent buyers are demanding properties that reflect their values and commitment to the environment. In the long run, sustainable real estate offers not just environmental and economic benefits, but also long-term resilience. As natural resources continue to be depleted and climate-related disasters become more frequent, the properties that prioritize sustainability and energy efficiency will be better positioned to retain their value. On the other hand, properties that ignore these trends may see their values decline as the market increasingly shifts toward green building practices. The second trend that will profoundly shape the real estate market by 2026 is the role of technology in transforming the way we buy, sell, and interact with properties. As we move deeper into the digital age, technology will become an indispensable part of the real estate industry, revolutionizing not just the customer experience, but also the operational efficiency of the market itself. From virtual property tours to AI-driven property management, technology is making the real estate process faster, more accessible, and more transparent. One of the most noticeable shifts will be in the way properties are bought and sold. The traditional home buying process is often lengthy, complex, and at times overwhelming. However, by 2026, real estate transactions will be increasingly digital first, making use of virtual tours, augmented reality, AR, and artificial intelligence, AI, to create seamless, immersive experiences. Virtual reality, VR, will allow potential buyers to take 3D tours of homes from anywhere in the world, whether it's exploring a luxury property across the country or checking out a small apartment across town. This eliminates the need for time-consuming in-person visits and allows buyers to make more informed decisions, often without ever stepping foot in the property. This also means that real estate agents will need to adapt. The role of an agent will increasingly focus on providing expertise and guidance rather than simply facilitating showings. Technology will empower buyers to do much of the exploration and research on their own, but the human touch in providing advice, negotiating deals, and interpreting market trends will still be highly valued. AI-driven platforms will also help agents by predicting property values based on data analysis, advising clients on the best time to buy or sell, and automating many of the repetitive tasks involved in transactions. Beyond the buying and selling process, property management is also undergoing a digital transformation. Today, property managers are adopting smart technologies to automate and streamline day-to-day operations. From monitoring security systems using AI-powered surveillance cameras to remote control of building functions like lighting, heating, and air conditioning, these systems will become the norm in residential and commercial properties alike. AI and IoT, Internet of Things devices, will help property managers predict maintenance issues before they occur, reduce operational costs, and improve the overall living or working experience for tenants. By 2026, buildings may even be able to self-regulate their energy consumption based on real-time data, offering owners and tenants a more efficient and cost-effective way of managing properties. Another significant advancement in real estate technology will be the increasing use of blockchain technology to facilitate property transactions. Blockchain offers a level of transparency, security, and efficiency that traditional systems lack. With blockchain, every aspect of a property transaction can be digitally recorded and verified in a decentralized manner, eliminating the need for intermediaries like title companies and notaries. This could reduce the time and cost of real estate transactions, while also reducing the likelihood of fraud or disputes. The transparency and security provided by blockchain will make real estate more accessible to a global market and could open up property ownership to new types of investors. Fractional ownership through blockchain could allow individuals to own a stake in high-value properties, democratizing access to real estate investment for those who have traditionally been excluded. Additionally, big data and predictive analytics will play a crucial role in decision-making for both buyers and developers. Investors, for instance, will rely on data analytics platforms to gain insights into market trends, identify emerging neighborhoods, and predict future property values with a higher degree of accuracy. Developers will use data-driven insights to decide where to build new projects, what features to include in homes, and how to price their offerings. This technology will allow developers to minimize risk and maximize returns, leading to smarter, more strategic development projects. For consumers, artificial intelligence will be a game changer in the home search process. AI-powered real estate apps and websites will become smarter and more personalized, offering tailored property recommendations based on preferences like location, budget, style, and even lifestyle choices. Virtual assistants will be able to guide buyers through the entire process, offering information on neighborhoods, schools, public transportation, and amenities, all in real time. These intelligent platforms will learn from user behavior and feedback, constantly improving the user experience. Even after a property has been sold, technology will continue to enhance the living experience. Homeowners and renters will increasingly rely on smart home devices, from voice-activated systems to self-adjusting thermostats and automated security systems, to control their environments. These devices will not only provide convenience, but will also help reduce energy consumption, contributing to the sustainability trends that are becoming so important in the real estate market. In the commercial sector, smart buildings with advanced environmental controls, efficient lighting, and automated maintenance systems will become the standard, helping businesses reduce overhead costs and improve the experience for employees and customers. As technology continues to advance, augmented reality, AR, and 3D modeling will allow developers and architects to present potential buyers with interactive, fully immersive walkthroughs of properties that are still under construction. Buyers will be able to explore every corner of a building before it's even built, allowing them to visualize and customize spaces to meet their needs. This level of customization and personalization will become a major selling point in both the residential and commercial real estate markets. Finally, online property marketplaces will evolve to include more advanced features, such as real-time bidding, instant property valuation, and AI-powered mortgage recommendations. The shift to digital platforms will streamline the process, offering greater transparency and convenience for buyers, sellers, and investors. The third key trend shaping the real estate market by 2026 is the profound impact of the changing nature of work. Over the past few years, we've witnessed a dramatic shift in how and where people work, accelerated by global events like the pandemic. The rise of remote work and hybrid work models has not only transformed traditional office spaces, but is also reshaping the residential and commercial real estate markets in ways we couldn't have predicted just a decade ago. As more companies adopt flexible work arrangements, employees are no longer tied to the geography of their offices. The urban exodus, where people leave crowded city centers for more spacious, affordable suburban or rural areas, is one of the most significant developments in the real estate landscape. By 2026, this trend will only intensify. Workers, especially those in knowledge-based industries, are increasingly realizing that they don't need to live in expensive cities to access high-paying jobs. As a result, cities that were once major business hubs, such as New York, San Francisco, and London, may see a decline in population as workers move to lower-cost areas, where they can enjoy better living conditions, larger homes, and a slower pace of life. This migration toward more affordable and spacious areas will drive up demand for suburban and rural properties, particularly in regions that offer a high quality of life, excellent schools, and access to outdoor amenities like parks and hiking trails. Secondary cities and small towns, which once struggled to compete with major metropolitan areas, will see an increase in demand as they become attractive alternatives for remote workers looking to escape high rents and the stresses of city living. Areas that were previously considered flyover zones may become vibrant hubs for tech professionals, creatives, and entrepreneurs who now have the flexibility to work from anywhere. On the other hand, major cities are not necessarily losing their appeal. Rather, they are evolving. Many urban centers are increasingly becoming hybrid spaces where work, leisure, and living blend seamlessly. In cities like Austin, Denver, and Miami, for example, we're seeing a surge in remote-first companies setting up shop, not necessarily because employees are required to be there full-time, but because these cities offer the ideal balance of culture, tech infrastructure, and lifestyle benefits. These cities are seeing an influx of people who are relocating not just for affordability, but because they offer the best of both worlds, an exciting urban life combined with proximity to natural beauty, recreational spaces, and lower living costs than traditional tech hubs like Silicon Valley. For real estate developers, this means shifting their focus from primarily building in high-demand urban centers to incorporating new projects in previously overlooked suburban or exurban areas. The demand for home offices and work-from-home spaces will become a significant factor in residential development. Homes will increasingly feature dedicated office spaces, soundproof rooms, or flexible layouts that can be adapted to suit remote work needs. Builders will need to adapt to the fact that in a world where telecommuting is becoming the norm, the home is not just a place to sleep, it is a place to work, live, and sometimes even socialize. This shift toward remote work will also have a profound impact on commercial real estate. As businesses recognize the benefits of hybrid or fully remote work models, many will downsize their office spaces or opt for flexible office arrangements. The traditional office model, where employees are expected to commute to a central location 5 days a week, will likely be replaced by more agile workspaces that prioritize flexibility and collaboration. Companies may reduce their permanent office footprint, choosing instead to rent shared spaces or operate with smaller satellite offices in multiple locations closer to where employees live. As a result, commercial real estate developers will need to shift their focus away from large, centralized office buildings and invest in flexible office solutions, co-working spaces, and tech-enabled buildings designed to accommodate a mix of remote and in-person employees. For commercial property owners, this shift to hybrid work will require rethinking how office space is used. The demand for traditional office layouts will decline as more companies adopt hot desking, activity-based working, and collaborative workspaces. The demand for co-working spaces is expected to grow as more freelancers, entrepreneurs, and remote workers seek flexible, affordable workspaces outside their homes. Cities with robust public transportation systems and good connectivity to residential areas may see a rise in smaller satellite office spaces or shared workspaces that cater to those who only need to be in the office for a few days a week. Another major shift in the work environment is the increasing reliance on digital nomadism. With the rise of remote work, there is a growing trend of individuals and families becoming digital nomads, working from wherever they choose, often traveling the world. This trend is especially pronounced among younger generations who value experiences over material possessions. Vacation destinations and resort communities are becoming more attractive to remote workers who want to escape traditional office life and work from exotic locations. In response, real estate markets in places like Bali, Costa Rica, and Lisbon are catering to these global workers by offering short-term leases, flexible co-living spaces, and access to high-speed internet. Developers are capitalizing on this trend by designing properties that appeal to these workcationers with amenities like private offices, meeting rooms, and high-tech infrastructure. This increased mobility of the workforce will also affect how cities and communities develop. Urban planners and real estate developers will have to reconsider traditional zoning laws, public infrastructure, and housing policies to account for the changing ways people work. There will be a growing focus on mixed-use developments where living, working, and recreational spaces blend together in an integrated environment. Cities will need to adapt by creating more pedestrian-friendly neighborhoods, improving transportation options, and ensuring that remote workers have access to reliable internet and public services regardless of where they live. To wrap up, the real estate market of 2026 will be radically different from the one we know today. With sustainability at the forefront, Technology reshaping how we interact with properties, shifting work patterns, changing where we choose to live, and the digitalization of real estate investments, the opportunities for innovation and growth are limitless. But with these opportunities come challenges, and those who want to succeed in the future of real estate must stay ahead of the curve, embracing these trends and preparing for the transformation ahead. The future is now, and it's time to build it.